My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. So for a lot of us, raising capital is always a challenge. And these days, it's even more of a challenge than it has been in the past. But that is not the case for today's special guest, Craig McGrouther, who is zooming in, as you can see, from beautiful Manhattan, New York. So Craig and his fellow team of merry capital raisers and syndicators have really dialed it in when it comes to raising capital for big deals. So that's what we're going to be talking about here today. And Craig, welcome to the show. Great to have you.
Thank you so much for having me on today, Dave. Really appreciate it. Appreciate you sharing some spotlight here and having me on, and looking forward to our conversation.
Likewise. So, Craig, for folks that aren't familiar with you, let's just start off. Maybe give us a snapshot about you and the company that you work with.
Yeah, so I'm the director of business development with Lone Star Capital. So what I specifically do is work with the equity side of relationships for the firm. So that's all, new relationships, new investors that come into our systems, past partners, things of that nature, structuring the capital stack, basically making sure that the equity is filled, and that, there's no stones going unturned during the capital raising process. So that's what I do. And then a bit about Lone Star Capital. We are a Texas buying sponsor. We are based in Manhattan, but we've got all of our deals based in Texas, Houston, Dallas, and San Antonio. So we buy, deals in that market. We're really specific and niche there. We've got our own property management and construction management teams in-house. So we're vertically integrated, and we're trying to buy good deals through all parts of the cycle. And it's no secret that, we're in kind of a turbulent part of the cycle right now, which is the best time to be raising money and the best time to be raising deals if you want to achieve true alpha.
Awesome. Well, thank you very much for the snapshot. So, just to give people an idea of the size of your outfit, more or less, what do you guys have under management right now?
Yeah, we have about $600 million of assets under management. So that's about 20 properties specifically in Texas.
Very, very cool. And Craig, how long have you been in this role? Basically, doing a lot with investor relations and starting up new ones, keeping the current ones that you've got going. How long have you been doing this for?
Yeah, I've been with the firm for 2 years. So very
Nice.
fortunate to get in early, because I think when we started the firm, we're about, 300 million, which is by no means a small company. But we've grown, substantially since my, even just starting up being at the firm, which is really cool to see, being able to put my fingerprint on it. But obviously, of course, being in a situation with a firm who's doing well and is thriving during a tough time.
Well, I think if I was you, I'd just tell them that that 100% growth is 100% due to me, man. But
Right, right, of course. And when I negotiate and stuff for pay increases, that's what I say.
awesome. All right, Craig. Well, let's talk about your specialty because this is very, very cool. You are all about the investor relations side of things. So let's talk a little bit about what you and the company do, Lone Star do, to attract new investors. And maybe let's back up a little bit because I think you have various categories of investors that you work with. So let's talk about maybe what the different kinds of investors are that you work with, sizes, that sort of thing. And then we'll talk about lead gen.
Yeah, really great question. And you're absolutely right. There's not just a silver bullet, one investor for our deals, right? So we've got a pretty deep and rich bullpen of people which we call for deals. Of course, there are some people who specifically ask for opportunities, and there's kind of a pre-set up relationship there. But oftentimes we get a deal under contract and we're kind of blind as to who may actually want to work with us on that opportunity. A lot of big funds and groups might come in and they've got certain mandates, or they might be overweight with their Texas allocation, or they have nothing in Texas and looking to put dollars into that market. So we're a perfect fit. So you really just never know where your next dollar is going to come from. But for the audience listening, there's a couple forms of where you can raise capital from. So there's, your own, in-house investors. We call those retail investors, which are, friends, family, maybe people that have organically heard about you, referrals, word of mouth, things of that nature. Then there's fund to fund managers who come in and create an SPV to raise capital for your deals. That could be someone who's raising $500,000 to $3 million. And then there's, some co-GP partners that we'll seldomly use, as co-GPing is kind of a little bit more on the back burner per se, but we'll still be kind of open-minded there. And then there's 1031 exchange investors that we allow into our syndication. So perhaps they're selling an investment property. It could be a single family house. It could be, a duplex, a fourplex, retail center, and they want to trade out to that into our multifamily offerings. We have that there. And then there's family offices that invest similar to kind of private equity groups, fund allocators who kind of raise big equity from big sources, if you will, from pensions, from basically big outlets like that, insurance companies, where they need to get kind of capital going. And then the final form of investor per se would be, actually, I think that's basically covered it. So I'll leave it there.
Okay, very good. So if you don't mind sharing just your opinion, what are kind of the pros and cons of the different major categories, and who kind of makes up the bulk of not the number of investors, but the amount of capital that is brought to the table for your typical deals? I understand every deal is different, but give or take, big broad strokes,
Yeah.
how does each one fit in?
That's a really great question. So I would say, typically speaking, if we're going to raise, let's say, like the sweet spot right now from an equity position is probably for us to raise about $15 million in a deal. So
Mhm.
if we were to raise $15 million in the deal, the makeup of that breakdown would be probably about $3 to $4 million of our in-house friends and family investors.
The
So at least
retail folks, yeah.
exactly. So that leaves us with $11 million slice we've got to fill in. So we've had instances where we've had, about 5 partners make up the $11 million. We've had, big 1031 exchange dollars come in. But I would say typically it's fund to fund managers and maybe a co-GP or two and us coming in that make up the capital stack for our opportunities. I think the pros to that as well are, when you do work with institutional people, your fees are cut in half, which is fine. It's not all about fees. You want to get good deals with good people. But
Mhm.
your fees are cut down, but there's convenience and certainty once you get kind of over the hump with groups, that you get the whole check size kind of coming in there. And it is nice because you're not tapping out and exhausting your, boutique, if you will, capital sources that are really more, maybe second job like people who are, really high earners, successful individuals that also kind of raise capital on the side. Those people can
And
kind
they
of
know a
tap
few other
out.
people like that. They bring their buddies to the table. Got it. Yeah.
Exactly. Yeah. So there's people like that. But the pro too, if you can truly syndicate it, because if you do a programmatic JV, that's not really a true syndication, if you will. So if you do syndicate it, you can kind of piece it together where we raise the 4 and then the other folks raise the 11. You can go from deal to deal to deal and 1031 exchange from opportunity to opportunity to opportunity, and really have all your equity kind of lined up and sorted up. And you can scale your business very quickly doing that. So that is a massive, massive amenity and benefit to the syndication route, as opposed to the JV joint venture route, where you got to return capital back because that fund that they have that they're allocating is typically a closed-end fund where they're going to raise somewhere between 300 million to $1 billion in a fund, and they've got X amount of years or X amount of time to allocate that capital into various deals. So with that said, it's great that you get the big check there, but your fees are cut in half. And then on top of that, which is, I said, not a problem, but it's just the reality. And then you have to sell the deal, and then you can't tick 1031 exchange into the next one. So
Oh,
there's no silver bullet per se.
yeah.
There's stress regarding any process because JV does take a little more time. It can be challenging to kind of close them from time to time. And then obviously sometimes your boutique capital fund managers can come in and they say they're going to raise 1 million and they come short, and then we got to left filling
You
up
got to
the
scramble.
exactly, we got to figure out the rest of the capital there. So there's no one size fits all situation, and I'll definitely say right now is certainly not an easy time to raise dollars. We've been fortunate to get our deals closed and almost oversubscribed, which is really great. But that's definitely something that is only going to get harder as the economy is shifting in real time.
Yeah, I would imagine for sure. Well, thank you very much for sharing that, Craig. If you could wave the realistic magic wand here, like who who would you just really kind of prefer, who would you and the company prefer to work with? Would it be like a whole bunch of the retail type folks and a few of these boutique capital raiser type partners if they could actually deliver what
Yeah,
they
and
say they're going to do?
And they do deliver often. It just, from time to time, if you've got new partners or they're already committed to another deal, maybe your A players are, kind of elsewhere. So you kind of got to go down the list. But I would definitely say, if we had it our way, we'd be raising, 10 to $20 million of our own, investors' dollars, and we control everything in house, and we, can kind of make that happen there. That would be the best way to do it. And then maybe you splice in, a couple, boutique fund managers or 1031 exchange investors into the mix, and your capital stack is sorted. So that would be the most profitable and probably the easiest process if you could do that. But it's very hard to get to scale and to raise that much equity from a retail basis.
Yeah, yeah, for sure. No, that is very, very cool. So thank you for explaining all of that. Now let's talk a little bit about what you do kind of day to day or month to month or seasonally or whatever it is. What are you doing to find new capital partners, whatever that might look like, retail or
Yeah.
yeah.
Yeah, right. So we're in various different, mastermind groups, which have a lot of, an ecosystem of sponsors like us, and then of course capital partners. We're very often posting on LinkedIn. So I think myself, and the founder of the firm, Rob, are posting every single day to attract people. And then on top of that, really just harvesting and developing really great relationships with the people that we're working with right now, i.e., some of our partners. And, you feel pretty confident and good about asking for a referral when you're taking very good care of everyone. And we've been able
Yeah.
to do that. And we feel confident with, asking for the referral, asking for the favor if that's the case. So with that said, that's kind of how we're doing it there. And then my day to day, calling people, making sure the capital stack's filled. It really just depends on where we're at. Right now, we're kind of raising for two deals right now. One of them is basically fully funded, and then another one is about to go live in a couple of weeks after the 4th of July. So although it's a bit of time to figure out what we're going to do with the direction there, we still got to make sure that we can, figure out the direction to not be stressed and leave everything to the last minute.
Yeah. I always, I always remember way back my early days, I heard some jerk say, some real estate guru say, just find a good deal and the money will find you.
Not true.
I say bullshit.
Correct.
Big time.
100%. Not true. It's
Yeah,
not that easy.
yeah, and that's why this is your full-time gig, man, is all around this. Okay, so you're in a very interesting position, Craig, because not only are you generating new investor leads and investor business, but I think you're also very, very heavily involved with relations, the investor relations side of things, keeping them happy. So maybe compare and contrast what that looks like between your retail investors and your boutique capital raiser type guys, and then the family offices and the bigger fish.
Yeah, well, I definitely think that our investors, or any investor generally speaking, for real estate investments is, really demanding, which is fine. You have the right to be demanding, but it's challenging to make everyone pleased. So we don't shoot to please everyone per se. We just do what we know is best as professionals in the space. And we're looking to attract the right people who trust our discretion and want to work with the best. And, one thing that we really wanted to do is never show and never train our investors to show the highest, internal rate of return, IRR. Actually
Mhm.
want to show the lowest numbers possible while still raising it. So sometimes that doesn't, make our job the easiest, or my job the easiest
It's
per
not
se.
quite as sexy, is it?
Not as quite as sexy, but when you benchmark and you show everyone the deal is going to be a 25 IRR, that's what you're projecting, and it ends up being a 14. Well, listen, I would take a 14 every single day of the week, but the issue is that you're 9 points off, right?
Mhm.
As opposed to, hey, you showed a 13 IRR and it's a 15. Well, 13 seems low, but a 15 is great. So it's all about the risk adjusted nature there. So that's kind of how we look at our retail investors, and that also applies to other investors as well, all throughout the capital stack. As far as, working with, the boutique people, one thing that we, there's always a balance of is, getting good economics on our end and being fair to their end. And
Mhm.
that's always kind of a tug of rope, or a tug of war.
Tug
Is
of
that
war.
what it's called?
Yeah.
Exactly. Tug of war, where you balance, giving good economics, but also, knowing the value that we're providing, because we're doing some really unique deals that most sponsors are not doing with some of our unique structures and things of that nature. So that's something that we do that's a little bit different per se. And then as far as, JV people and things of that nature, it's tough right now to crack there. They're really picky with deal flow right now. Most people, although they won't claim that they're pencils down, they really are. They're not putting up very much equity right now. So their
Mm.
bar is set very, very high for a new group like us to work with them, which is totally fine. So it's hard to, kind of please and be there. But the reality is cash and capital is really tight right now. And a lot of people think that, deals and call it 6 months to a year from now may actually be more enticing, and they want to kind of wait to allocate at that point. And then family offices, it's typically a need on their end. Maybe they've got a 1031 exchange, they've got, $10 million of equity, or they've got, they need to deploy, call it $500,000 every couple of months into funds, just at various points of the stage. And they're just pretty or timing agnostic, and they want to basically just find a good deal. So every person in every group is a different flavor and kind of risk approach, and kind of a different curve of things. There's one really great shop that we're in contact with right now that we've been very close to doing a deal with, and I'm really happy to hear the reason why they're not looking at our deal right now. It's not that they didn't like the deal, just they have 4 term sheets out on 4 different deals right now, so they're very actively buying. So that is the best no I could possibly hear is, no, we're actually busy putting out dollars right now, and we need to commit to getting these to the finish line before picking up and looking at the next deal.
Very, very cool. Well, that's awesome, Craig. So I'm hearing there that especially with the smaller investors, the retail folks and the boutique guys, it's a lot of do your best to under promise a little bit and over deliver.
I
Just
would say it's
simplifying
very
it.
fair. Yeah.
Yeah, that's always good advice. I've always kicked myself in the butt anytime I haven't followed that advice. It always seems to bite me. So very, very good advice. And then the really big guys, it's more about timing than anything and just kind of breaking in with them, getting that first proof of concept. And I think it gets easier after that. And
Without a doubt, yeah. I mean, and you could send the best deal ever to them that you've done, but if they're, really not from a bandwidth perspective allowed to do the deal or want to look at something, it's not good timing. It's nothing you've done wrong. And we've definitely experienced times where, hey, we like the deal, but we're looking at something else right now, so we can't do it. Or, hey, we're too overweight in Houston and we can't do another deal in Houston right now. So, we like the deal, we like you guys a lot, but maybe next time. So
yeah,
it's just part of the game. And, that's why we go to all the conferences we're going to, and we're out and about as much as possible to, attract more capital partners and things of that nature.
no, very, very cool. Well, hey, hats off to you. You've done a lot in a short period of time. Sounds like you're going hard there. I was kind of looking around a little bit on your website. Very nice site, by the way.
Thank you.
Looks like you guys do a lot with events and kind of investor appreciation type things. Or I know you're putting on a big event in September, I believe. So tell me a little bit about how that all ties in. And
Yeah, without a doubt. Well, I think the number one thing to, do for someone like us who's younger and whatnot, we don't want to be a commodity per se in the space. So what I mean by that is, hey, you're just another group sending over 13 to, or call it a 15 to a 20 IRR on a deal. We want to get to know everyone on a human level and actually have a legitimate relationship with folks.
Mhm.
And by the process of doing that, we will, attract probably better relationships and better capital, and they'll have a better understanding of what we're looking to do. But when you only are, looking at just the returns of the deals, it's a dehumanizing process. So we want to make sure we humanize the process as much as possible. And, we have the understanding and kind of can share to people how, why this deal works. And, they can basically build more trust and comfort with us by being with us in person. It's a certain amount of time and places and hours with someone before you really build trust and relationship. So we
Mhm.
found that by being together a certain amount of time and period is really beneficial to kind of converting people. And we've seen that happen time and time again. So we always are hosting, an investor dinner, meetups, things of that nature to make sure that, we see everyone. And the founder, Rob, and I have a plan to, within the next couple of years, meet every single investor in person. We travel quite a bit for the job, me more than him now at this point, but, it's my goal to try to meet everyone.
Very, very cool. So what kind of events do you talked a little bit about investor dinners and stuff like that. What have you found as for your personal experience has just been like the most enjoyable for you and for the attendees as well? What's the most
Yeah,
fun bit?
I would imagine our summit event, which is coming up in September, is probably the most fun event. And the reason why it is because it's kind of the best and brightest of our network. It's pretty rare that a group like us is allowing or willing to invite their equity partners, people they've done deals with, and other sponsors into a room where, hey, here you go. We're pretty transparent in that regard. We're really confident what we're providing and that, our niche there. So we've done that, and we typically look to do that. And I definitely think that's been the highest ROI thing that we do is that event style.
Very cool. Very, very cool. No, that's awesome. Craig, hey, thanks very much for your insights. Really appreciate it. That's been very valuable. And if people want to find out more about you and connect, where should they go?
I would recommend LinkedIn. It's probably the best place to have us there. And if you want to go really down the rabbit hole, go to YouTube at that point. But LinkedIn is where we're posting a lot of nuggets and tidbits, and you can kind of see how we view the world from a real estate perspective there.
All right. And LinkedIn, they're looking for what? Your
Yeah,
name
just my
or?
first name, Craig McGrouther. Yep.
Awesome. Very good. All right, Craig. Well, hey, keep up the good work and keep doubling business for these guys on a regular basis.
Thank you, Dave.
All right, everybody, take care, and we'll talk to you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.